My name is Colin Rose. I'm chairman of Marmota Limited, ASX MEU. Marmota is an exploration company based in South Australia with three core projects: gold, where we have outstanding bonanza grades; uranium, where we are right next door to the Boss Honeymoon mine; and a brand new thing, which is a titanium discovery yielding bonanza grades, also in South Australia.
Colin, lovely to meet you, but we have to admit to the listeners and viewers that we've had a couple of attempts at doing this. Technical issues. But here we are. We're at it again. Okay, so let's give everyone a little bit of background about you. Where have you come from? What have you done and relevant to what you're trying to do today?
I have been an investor in the mineral space since I was a teenager. About 7 years ago, actually 8 years ago, I was at the time, in fact, an investor in Marmota. At that time, the company was purely a uranium exploration company and a very successful uranium exploration company. Around that time, or in fact just a few years earlier, Fukushima happened, and it essentially wiped out the entire uranium sector. And so Marmota, as a company, was not changing or evolving with the time, and you basically had to change, because even if you had the best uranium project in the world, and we had a fantastic uranium resource already at the time, there was simply nothing that you could do in terms of getting market traction. And that is the time that I became involved, in fact, organized as the company's largest shareholder at the time, something which in Australia is known as Section 249D, which most boards would not really want to receive. It's a sort of way or mechanism for shareholders to change the management of companies. And it was actually greeted with considerable warmth and success by the shareholders, with almost unanimous support. I think it was well over 90%. And I ended up becoming chairman of Marmota and changing the direction of the company at the time from its focus on uranium to gold. And the reason for that was because at that time, the company had actually acquired a whole chunk of ground around what at the time was called the Challenger Gold Mine, which had started about 15 or 20 years earlier as a extremely successful at the time open pit gold operation, which subsequently went on to produce over 1 million ounces of gold. And we brought in the same geologist, a gentleman called Dr. Kevin Wills, who had been one of the two geologists that gave rise to the discovery of Challenger, and brought him on to Marmota as head of exploration, I think at the time, and basically wanted to find the next Challenger. And so I can actually bring up a map if I find one somewhere in one of these documents, any one of these general map diagrams. So it's taking a bit longer to find. So over here, we have a map. You can see the Challenger Gold Mine in the middle. And we ended up making, at the time, within about a year or year and a half of Kevin in, a very significant gold discovery at a place called Aurora Tank. And since then, we have made a number and series of acquisitions, such that we now have a land holding of some 10,000 square kilometers of ground. Everything you see basically in orange, even in the light blue ground, we have the gold rights. The pink areas, we have 90% of the gold rights. And and so we have now a gold discovery at Aurora Tank, which we've been working on, which has been yielding bonanza grades, with grades over 100 grams a ton in 5 different areas. And then acquisitions of Golf Ball, Campfire Ball, Greenwood, Maywood, which all have existing gold JORC resources. And so that set in place the gold strategy, which has been very, very successful for the company. And we've been working for the last about 7 years to primarily bring Aurora Tank to the stage where we can define an open pit, ready to carry out all of the JORC studies, the feasibility studies. All of that work is ready to happen. And in that interim, in that time period, particularly in the last 2 years, what has happened is that the uranium price, in terms of fundamentals, has come resurging back, almost tripled in value compared to 2-3 years ago. And so suddenly we had all these shareholders who had originally started with the company as a uranium explorer. We already have a uranium JORC resource. We've been working on the gold, and suddenly the uranium price comes back. We've been wanting to get back into the uranium space. We haven't done anything in uranium in the last 10 years. So we've been wanting to get back in the uranium space, but at the same time, we've been working for the last 7 years in gold, and it's a little bit like building a house, and you've almost got the roof on. You've been doing all this work, and then suddenly uranium comes back, and you want to go into that space. So what we've been trying to do over the last year is to wrap up the exploration at Aurora Tank, so that we can then move the exploration over to the uranium space. The gold proceeds along a pathway towards production, because that's the stage it's now at, and we can seek to grow the size of our uranium resource. So that's a pretty good summary of everything up to as things were in about 3 or 4 months ago, except much to our surprise, we now have a very, very exciting titanium discovery to add on top of all of that. And I'll tell you more about that perhaps a bit later.
Okay, because obviously I think you've had a good reaction, I think possibly to the titanium component recently, but there's a lot of moving parts in here, and I'm trying to work out what type of company you're going to be, because you talk about like high-grade gold assays from Aurora. Uranium, I guess, is the heritage of the business. Then you kind of got this new thing, titanium, coming along here. So, and I understand what you're saying with regards to maybe, prioritizing the work effort, but what's the actual business plan? What am I buying into? What type of company are you, and what commodity are you chasing?
Well, we are happy to chase whatever is commercial and has prospects of commercial success. And that is, in fact, I would say, the beauty of Marmota. I think it actually distinguishes us from other companies. So most companies have, if they're lucky, one really good project. And Marmota now has 3 outstanding projects. So we have a gold project which has got everything going for it in terms of low cost, low capex, bonanza grades, close to surface. We have a uranium project which is right next door to one of only 3 companies in the whole of Australia which are actually in production. And the titanium is got bonanza grades again. So we could, in some sense, actually split Marmota into 3 companies, and it is something that potentially could happen one day, that we set it up as a separate gold company with the gold assets, a separate company for the uranium assets, and a separate company for the titanium assets. I think it's too early for that to happen, but the thought bubble is there, and it's an idea. There's also the question of, there's an argument from economics and finance modeling and these sorts of things where you allow shareholders to make the decision whether they want to be in a gold space, in a uranium space, or a titanium space, in which case you should have 3 models, 3 separate entities. Or the alternative, which is that, particularly given Marmota's experience, which we went through as a company before I arrived, when you have one core asset and then market fundamentals move against you. Now, other companies are seeing this today, for example, in the lithium space, where they were just a lithium company and the lithium market got sort of almost wiped out by collapsing fundamentals. Or those in the rare earth space, you have become, if you call yourself so-and-so rare earth company, and rare earths get smashed either through oversupply or changing market fundamentals, or whatever the reason is, then you have a fundamental problem. And if you're a nickel company and the nickel price gets smashed, you have a fundamental problem. Marmota happens to have gold, which is extremely strong at the moment, uranium, which is extremely strong at the moment, and titanium. So they're all strong. But we don't control what ultimately happens to fundamentals. And having 3 core assets does place us in a really strong position in terms of both risk management and opportunity going forwards into the future.
Right, but it also comes down to like cash management and advancing and talking about growth stories and all the rest of it. But cash is important when you're a sort of small company to be efficient and allocate that well. I think the gold market, I've seen gold price, hit all-time highs, fantastic news. But for most explorers around the world, they're not kind of getting that reward for that because they're not producers, they're not near-term producers. So with the gold component of this, I mean, how would you come at that?
So this is exactly explains what's been happening with the company over the last year. So even though uranium had come back and we wanted to get into the uranium space, we are fully aware we are not a Rio Tinto, we're not a BHP. We know it's very completely consuming to run one drill program at a time in terms of resources, geologists, fuel trucks, water supplies, all of those things that happen. So we don't want to, and we're not equipped to running multiple drill programs, uranium, gold, and titanium all at the same time with different crews. We're not that kind of company, and that is why we have had to delay the uranium side, going back into the uranium space until we got Aurora Tank to a stage where basically we have completed exploration for the purposes of defining an open pit. And once that is completed, what happens on the Aurora Tank side of the gold space is it transitions into a whole bunch of managed studies, which are JORC, feasibility, etc., etc., etc. They're not particularly expensive to do. And so our exploration expenditure is freed up from working on the gold and it gets allocated to the uranium. The beauty of titanium, particularly the model which we have, is that it is so close to surface and in soft mineral sands. And when I say so close to surface, I mean starting from surface, from zero. And we only drill down to refusal, which is about 30 meters or 34 meters from surface, that the cost of exploration is so low that we can carry out an exploration program in titanium for what other companies spend on their marketing. That's the essence of it. We can carry out a major program in titanium. It's such a low-cost model, and it's also the nature of the geological continuity between holes. It's very, very different from searching for gold or uranium, which is a much more expensive model.
So are you reprioritizing the company's not just efforts, but focus and narrative, quite frankly? Because I explained to you what's going with perception of gold exploration companies, but uranium too had the price has shot up in the last 2 years, but it's also had a kind of reset last year from I think got up to $107 US, down at sort of mid to low 70s at the moment. I think most people watching and reading this and listening to this understand the kind of the tightly coiled spring thematic for uranium going forward, but it's kind of in a quiet moment now. So when planning what you're doing, clearly you don't want to be knee-jerk reacting to titanium's hot, let's go this week. Uranium's back up, let's go. There's got to be sort of a kind of careful, educated plan of how you build value and where you think that value is going to come from in 2025. So what do those conversations look like at the board level?
Some of it is really common sense and obvious. So in the gold space, we want to see the assets which we have been working on for the last 7 years getting themselves into production. And to do that, the logical thing is to complete the work which we had to commence to the point where it is at a stage where we don't have to do more exploration. And it's just a question of metallurgical studies and so on. We've already carried out the environmental studies. We already have a camp. We already have a water supply. So all of these things are set up. It's a question of ticking off boxes. And one of the beauties of the Aurora Tank model, which is an open pit, close to surface gold discovery, is that we have the most remarkable metallurgical properties that we do not need, as other companies almost always need, which is to build a custom mill with a gravity unit and all these other complexities, which requires hundreds of millions of dollars of capex. That is the real thing that stops people from going into production. It is the cost of the capital expenditure of getting them into production and the risk and uncertainty that those companies face. We don't have that problem because we have this amazing metallurgical properties, which means we don't have to build a mill, and we can carry out what's called a heap leach operation, which is a greatly simplified operation where you basically dig the stuff out the ground, put down some plastic sheets, place the material on top, and then pass chemicals through, which leach through the material, and basically the gold comes out at the bottom. And the capex costs for doing that are approximately maybe 10% or even less than that of setting up a normal mill. And you don't need a tailings dam, you have a tiny fraction of the number of people working on it, and you'll never get back as high recoveries as you will get back from a mill. And we've done all of these kinds of test work, and we're just about to complete some much more detailed test work on this. We know that if we went through a mill, we would get back somewhere around 93, 95, maybe even 97% recoveries, which is as high as anyone ever gets. And if we went through a leach process, heap leach process, we would be, in the previous work we put out, we got back recoveries of 83%. And we're doing some more work on that, and we'll have further announcements about what the further work has revealed, optimizing that process. Now, if you can get back 83% without building a mill, instead of 93% and having to build a mill, you'd be crazy to go and spend $400 million or $300 million or $250 million to build a mill, when for the small cost of leaving 10% of your material in the ground, you can achieve the same thing but get back 83% instead of 93%. So it so dramatically changes the risk-return trade-off, the balance, the optimality, the simplicity, the risk structure. That is exactly why we want to get the gold into production. It is exactly why we have on the screen, you can see all of these other resources at Golf Ball, Campfire Ball, Greenwood, Mainwood. They all have existing JORC resources. That's why the company acquired these things, is because we are looking already beyond Aurora Tank and thinking, what are we going to do after Aurora Tank? And we want to have a whole pipeline of these things to set the company up for a decade or more, that we can progress each of these things as soon as Aurora Tank is finished in production, progress to the next one and do the same thing using the same equipment, or possibly moving the ore back to the processing equipment at Aurora Tank, one after the other, and the gold thing takes care of itself for the next 10 years.
Okay, we've seen quite a few companies move and change, move to a model similar to this, or change the model up to trying to create a nearer term revenue company, because that's what's getting rewarded in the marketplace. It also potentially has the ability to reduce dilution in the short term if the share price reacts because money's cheaper. And in the longer term, dilution because you're creating revenue instead of like raising money, drilling. So this isn't about optimization in terms of building up a big scale project to create that optimization. This is about saying to the market, we have the ability to get into near-term revenue.
Exactly.
Please reward us. Okay, and that's fine. We've seen that happen a few times. For those who can,
and I don't think the market is aware of that yet, because for the last 7 years, it's all been about exploration. And, we've been getting bonanza grades with 100 grams a ton and so on and so forth. And then we do some further work. Sometimes, for example, in November last year, we were actually trying to sterilize the deposit. In other words, close off the bottom of the deposit where things were still open, and we were not expecting to get any further grades. And then we got some fantastic numbers at the bottom. Much to our surprise, we'll probably still have to do like a tiny more drilling just to sterilize it at the bottom. But there comes a point where when you've got 100 grams a ton, and then the next year you get 100 grams a ton, and the next year you get 100 grams a ton in a different area, the first time you do it, the market gets really, really excited because they can see the upside potential. But when it's happened 5 times in a row, eventually people say, well, we know you've got 100 grams a ton results, and now they want to see you to, do something with it. And that's exactly where we are. And the time has come for Aurora Tank to change from being an exploration project to progress to something which actually rewards our shareholders and those who put money into the company. So that's exactly how we see it.
Okay, so where are we in that process? Because you talked about it's more likely to be like a hub and spoke type setup, but with regards to the known resource, where are you with that? So we understand how this thing could maybe start fitting together, and what would the study look like in terms of the realities of setting up an operation as you've described?
This is an overview of Aurora Tank. I don't know if you can see the numbers. We have at least 5 different areas where we have grades over 100 grams a ton. I'll just bring up the Aurora Tank discovery. And sorry, just bring this over here. So just as a summary of the kinds of intersections which we are seeing at Aurora Tank. So we got held up for about a year or year and a half because one of the critical aspects for doing a heap leach is that you have to carry out metallurgical test work to optimize the way the heap leach is actually going to perform. It's the only tricky part. You basically have this pile of material ore that has come out the ground. You're going to run the chemicals through. You have to make sure, or you can optimize it to add little concrete pebbles so that it doesn't clog up and that the liquids flow through properly. And if you don't set it up properly and you rush into these things, you end up with a heap leach which doesn't work. So you want to make sure that you get this thing right, that you've done the appropriate test work. And this is the same in every kind of mining, whether you do titanium mining or if you're doing uranium. It's all about process and so on. And so we want to know what kinds of recoveries are we going to get, because when you know those numbers, that in turn, just like the gold price itself as a fundamental, your recoveries are also going to determine the optimal shape of the open pits, which, so if your gold price is high or your recoveries are high, you're going to end up with a bigger open pit and perhaps deeper than you might otherwise have. So all of these things are inputs into the model. And we've been waiting to finalize the metallurgical test work. We expect that to be finalized in the next couple of weeks or 3 weeks at the most, something like that. Once we have all of those numbers, that is going to become the input into all of the design of the optimal pits in terms of the resource modeling and JORC studies. All of those things follow from that, because we're not interested in just the amount of gold which is in the ground. We're interested in the amount of gold which is recoverable from the ground. And so we've actually set out, and it's the first time that we've done it, in our AGM presentation quite recently in November last year, a timeline over the next 6 months, setting out what is going to happen in the gold space, what is going to happen in the uranium space, and what is going to happen in the titanium space. And so in the gold space, we're looking at completing the metallurgical test work, putting out resource estimates, scoping study, and a maiden resource. All of that we expecting to happen in the next 6 months. And then in the uranium space, we have to complete some work on the exploration review and drill program. We want to commence our first drill program around the end of the first quarter, and then update the uranium resource. So we already have a uranium resource. We want to see that double, potentially triple. And in the titanium space, this is the one where we're actually able to work most quickly because we are starting from base. So when you're starting from zero and you suddenly make a new discovery, things happen very, 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 very rapidly. And so we've made this discovery as it was mid-November when we had our first titanium result. We then carried out heavy mineral test work. We got some of the highest numbers I think anyone's ever got in Australia for the heavy mineral concentrates. And we have a drill program commencing in 7 days' time, where we're going to expand from 4 holes through to 89 new holes. So that is a dramatic change in terms of the amount of knowledge we have. And the ultimate intention is to be able to put in place a resource for titanium as well. So then we'll have 3 resources.
Okay, so if people understand what you're trying to do with the gold, and the fact you are trying to move it through the phases to rapidly, but in a sensible way, and move it through to kind of production capability, how long do you reckon that process takes? Because there's a whole bunch of optimization, even with heap leaching, as simple as it is, as cheap as it is compared to conventional. You're going to need to do things the right way, and you're going to need to fund that, and you're going to need the market to understand it and buy into the time frame to be able to deliver, revenue. Because you're going to have to raise capital at some point for that build out, even if it is
every exploration company has to raise money. It's part of the model, just as every technology company has to raise money. It's not an issue. The issue we have had over the last year is that there have been people coming to us non-stop wanting to give us money, and we have not wanted to take it because our share price, for whatever reason, was not where we wanted it to be. And we do not want to raise in those circumstances. So we have not done that. We did a very small raise at the end of June last year, and the only reason we did that was because we had some what are called JMEI tax credits, which is a model funded by the Australian government called Junior Mineral Exploration Incentive. It's a taxation break, which actually passes on to shareholders who make investments in the company. We didn't want those tax credits to go to waste, so we did a small raise for the benefit ultimately of the shareholders who took part. But raising money has not been a problem for us at all. And the costs of transitioning us towards production in the gold space are very, very small compared to the costs of doing exploration. And even our exploration costs in the gold model, we interested in almost everything we have in terms of at Aurora Tank is located, within 50, 70 meters of surface. And accordingly, our exploration costs in the gold space have been quite low. So you can just see some of cross sections. This is the most recent drilling which we've done in the November results, whatever coming out. And everywhere you see a purple bubble, that's grades over 5 grams a ton. But we have all of these things which are typically 20, 30, maybe even 40 meters from surface. And we have grades of 120 grams a ton, 3 at 10, 3 meters at 25. Very, very attractive grades. And particularly close to surface, we have nice, deep, thick intersections as well. And then we have another long section, which is, I think, in the next diagram. This is running across through what we call the northwest flank. And we have this wonderful geological continuity in terms of where you would find and expect to see the next, if you put down a hole over here, you can be very sure you'll find some gold. And then we also found a further similar layout of gold underneath, and it remains open at the bottom. And in fact, some of our best grades were there, 2 meters at 112 grams a ton. But by the time we got down here, we were getting to maybe about 100 meters below surface. And so you ask yourself exactly, in response to the types of commercial decisions which you are raising, do we want to be spending more money on drilling holes at 100 meters below surface, which may or may not fit into an open pit design, when our focus should be trying to get the gold out, which is already in an open pit model, whatever we end up finding below, we will always start out with an open pit operation, because the cost of an open pit is about 1/10 of the cost of going underground. So as soon as you go underground, all your costs go up about 10 times. And so the logical thing is to start with an open pit model, progress whatever gold we can get out of that. And if it ultimately then develops into an underground operation, as Challenger, for example, did, or if we decide to change our focus from, instead of going underground at Aurora Tank, to instead doing the next open pit at Campfire Bore or at Gulf Bore or at Greenwood, one of the extra deposits which we have acquired, which already have JORC resources, it may well very be the case that that is the logical path. And so we have been extremely fortunate, and I'll show you our board structure, that, and it's exactly why we did so, I can find the appropriate slide, that we brought in a gentleman called Neville Bergen, who is a mining engineer with more than 40 years experience. He was a former director of Northern Star, vice president of Goldfields Australia. He was the general manager of operations for Goldfields, and most recently carried out the pre-feasibility study for the Karlawinda Gold Project in WA, which was Capricorn, and that has been enormously successful. I mean, Capricorn has literally taken off and become a really significant player in the gold space. And it's precisely because we are trying to transition from exploration to production, which is a completely different ballgame with completely different challenges, that we brought Neville in to provide advice on the production pathway.
Okay. And so, you've laid out a lot of hopes and plans there for getting after the gold. Uranium will, I think it's an interesting space. Given it's part of your heritage, and given what I think the market's doing, that has some value, as you mentioned. But there's the potential for spinning out various projects at various times when you're ready. And titanium, relatively new, but potentially can move through the phases quicker. So there's a lot going on, and a lot for people to try to understand. And I think you've helped to clarify a few things today. But look, I'm going to wrap it up there, because there's a lot to digest, and I want to, because you've got some good projects there. I just want to have a think about this. So maybe let's stay in touch. Let us know how you get on with the various projects over the next few weeks. This sounds like you're going to be busy. So appreciate your time today, Colin. Thank you.
Absolute pleasure. Thank you for having us.